Hey everyone. If you were born before 1961, I've got some news that could literally put extra money in your pocket this week. We're talking about fresh state pension payments that many people don't even know they're entitled to. Now, I know pension talk can sound boring, but stick with me here. This isn't your typical government bureaucracy story. This is about real money for real people who've worked their entire lives and deserve every penny they're owed. So if you're approaching retirement age, already retired, or you've got parents or grandparents who might benefit from this, you're going to want to hear every word of what I'm about to share. But first, let me ask you something. Have you ever wondered if you're getting all the state pension you're actually entitled to? Because here's the thing, thousands of people are walking around right now, completely unaware that they are missing out on money that's rightfully theirs. Drop a comment below and let me know, are you confident you know exactly what your state pension entitlement is? Or are you like most people, just hoping the government gets it right? And while you're down there in the comments, hit that subscribe button. We cover money news that actually affects your daily life, not just the stuff that makes headlines. Right, let's dive into what's actually happening this week. The Department for Work and Pensions has been conducting what they call a data reconciliation exercise. That's government speak for we're double-checking our homework to make sure we haven't underpaid anyone. And guess what? They found mistakes. Lots of them. Here's the deal, if you were born before April 60th, 1961, there's a chance your state pension has been calculated incorrectly. We're not talking about small amounts either. Some people are owed thousands of pounds in backdated payments. Now, why 1961? It all comes down to how the state pension system changed over the years. Before 2016, we had what's called the old state pension system. It was complicated, with basic state pension, additional state pension, and something called SERPS, the State Earnings Related Pension Scheme. The whole thing was a maze of different rules and calculations that even pension experts found difficult to navigate. When the new state pension came in, it was supposed to simplify everything, but it actually created a two-tier system where people born before 1961 stayed on the old rules while younger people got the new, supposedly simpler system. Let me give you a real example. Meet Margaret, a 68-year-old retired teacher from Birmingham. For 5 years, she'd been receiving £142 per week in state pension. Sounds about right, doesn't it? But after this review, she discovered she was actually entitled to £167 per week. That's an extra £25 every single week, or £1,300 per year. And because they backdated it to when her pension started, she received a lump sum of over £6,000. Margaret's not alone. There are thousands of people in exactly the same situation, and the reasons are both complex and infuriating. The first group being affected are women who took time off for caring responsibilities. The system often failed to properly credit years when women were caring for children or elderly relatives. If you got child benefit or carer's allowance, those years should count toward your pension, but the computers didn't always join the dots. Sarah from Manchester discovered this the hard way. She'd taken 15 years out of work to raise 3 children and care for her elderly mother. She assumed those years counted for nothing pension-wise, but actually, 12 of those years should have been credited to her national insurance record. The result? She was being underpaid by £18 per week, which doesn't sound like much until you realize that over her retirement, it adds up to nearly £15,000. The second group affected are people with complicated work histories. If you moved between different pension schemes, worked part-time, or had gaps in employment, the old system sometimes got confused. It might have missed periods where you were actually building up pension rights. Take David, who worked for the same company for 30 years but had a brief spell of unemployment in the 1980s when his factory closed down. During that 6-month period, he was on benefits and should have been credited with national insurance contributions. The system missed this completely, and David was shortchanged by about £8 per week for his entire retirement. The third group, and perhaps the most significantly affected, divorced women who should benefit from their ex-husband's pension record. This is a big one that affects thousands of women who divorced before 2016. Under certain circumstances, divorced women can inherit some of their ex-husband's state pension rights, especially if they divorced before the pension sharing rules changed. But the system often failed to automatically apply this, leaving women significantly worse off than they should be. Linda from Liverpool divorced in 1995 after 25 years of marriage. She'd worked part-time while raising children, so her own pension entitlement was modest. But she should have been able to claim some of her ex-husband's additional state pension. The system never made this connection, and Linda was missing out on £31 per week. That's over £1,600 per year. Here's what makes this particularly frustrating: most people had no idea they were being underpaid. Your annual pension statement might look official and correct, but it was based on incomplete data. The government was essentially working with half the information they needed to calculate your entitlement properly. It's like trying to do a jigsaw puzzle when someone's hidden half the pieces. You can make something that looks roughly right, but it's never going to be complete. So here's my question for you: how many of you have actually sat down and properly reviewed your pension entitlement in the last year? Not just glanced at the annual statement, but really dug into whether it's accurate. Because I'm betting most of you haven't. And I get it, it's confusing, it's boring, and we trust that the government gets this stuff right. But clearly, they don't always. The truth is, most of us receive that annual pension forecast, glance at the numbers, think that looks about right, and file it away somewhere never to be looked at again. But those numbers might be wrong, and if they are, it could cost you thousands. Let's zoom out for a minute and look at the bigger picture, because this isn't just about individual cases. This represents a massive systemic failure that's been going on for years. The National Audit Office estimates that the total underpayments could exceed £3 billion. Yes, billion with a B. That's money that should have been in pensioners' pockets, helping them live with dignity after a lifetime of work and contribution. To put that in perspective, £3 billion would fund the state pension for about 300,000 people for an entire year. It's not pocket change, it's a massive amount of money that rightfully belongs to people who've worked hard and played by the rules their entire lives. But here's what really gets me: this isn't new. Similar problems have been identified before, fixed temporarily, and then cropped up again. It's like the system has been held together with digital sticky tape for decades. Every few years, there's another review, another discovery of underpayments, another round of corrections. The root cause? Legacy computer systems that don't talk to each other properly. Your national insurance records might be in one system, your child benefit history in another, and your pension calculation in a third. Getting them to work together seamlessly has been an ongoing challenge that successive governments have failed to solve properly. The government estimates that around 200,000 people have been affected by these errors. But here's the thing: they're only contacting people proactively if they think you're owed more than £500. If you're owed less than that, you might need to chase it yourself. And let's be honest, £500 might not sound life-changing to some people, but for someone living on a state pension, that's groceries for months. It's heating bills during winter. It's the difference between struggling and managing. For many pensioners, an extra £10 per week can mean the difference between having to choose between heating and eating. Now, the government says they are fixing this. They've hired extra staff, they are upgrading systems, and they are being more proactive about checking records. But the damage has already been done for hundreds of thousands of people. Some of these underpayments have been going on for decades. Think about all those pensioners who died never knowing they were owed money. Think about all the people who've been struggling financially when they shouldn't have been. It's not just about the money, it's about respect and dignity for people who've contributed to society their entire working lives. And here's something else to consider: if you're currently in your 50s, this matters to you too. The systems calculating your future pension entitlement are the same ones that got it wrong for current pensioners. The new state pension introduced in 2016 was supposed to be simpler, but if anything, it's created more complexity for people caught between the old and new systems. If you're born after April 1961, you'll get the new state pension, but your entitlement might still be affected by years you worked under the old system. It's worth checking now, not waiting until you retire and discovering there's a problem. The broader trend we're seeing is that pension rights are becoming increasingly complicated to navigate. The average person needs a degree in pension administration to understand what they're entitled to. The introduction of automatic enrollment, pension freedoms, and various state pension reforms has created a landscape where even financial advisors struggle to keep up with all the changes. It's no wonder that ordinary people are getting lost in the system. Think about it this way: the full new state pension is currently £203.85 per week. But if you're on the old system and you're being underpaid by even £20 per week, that's over £1,000 per year. Over a 20-year retirement, that's £20,000 you're missing out on. These aren't just numbers on a spreadsheet. These are real people trying to heat their homes, put food on the table, and maybe occasionally treat their grandchildren to something special. Every pound matters when you're living on a fixed income. Right, enough about the problem. What can you actually do about this? Here are 3 concrete steps you can take this week. First, get your state pension forecast. Go to gov.uk and search for Check Your State Pension Forecast. You'll need your national insurance number, but it's free and takes about 10 minutes. This will show you what you're currently expected to get when you retire, or what you're entitled to if you've already retired. But don't just accept the numbers at face value. Look at your national insurance record carefully. Are there any gaps or years showing zero contributions that shouldn't be there? Look for periods when you were claiming child benefit, carer's allowance, or were unemployed and claiming benefits. These should all show up as credited years. Second, gather your documentation. If you think there might be an issue, start collecting evidence. Child benefit records, carer's allowance documentation, P60s from old jobs, divorce certificates, anything that shows periods when you should have been building up pension rights. I know it sounds like a hassle, but think of it as potentially very well-paid paperwork. If you're owed money, the sooner you claim it, the sooner you'll start receiving it. Don't worry if you don't have everything. The government should have most records, but having your own copies can speed up the process. Third, make the call. If you spot any discrepancies or you're just not sure, contact the pension service directly. The number is 800 731 469. Yes, you might be on hold for a while, and yes, it can be frustrating. But remember Margaret from earlier, that phone call was worth over £6,000 to her. Don't be put off if the first person you speak to doesn't immediately see the issue. Sometimes you need to be persistent. Ask them to review your entire national insurance record, not just the headline numbers. If you're not satisfied with the first response, ask to speak to a supervisor or ask them to refer your case for a full manual review. Here's the thing that really strikes me about this whole situation: how many other government systems are quietly getting things wrong? How many people are missing out on money they're entitled to, simply because they don't know to ask? This state pension issue is probably just the tip of the iceberg. It makes you wonder what else might be slipping through the cracks. Are housing benefit calculations correct? What about universal credit? Are tax credits being calculated properly? The truth is, these complex government systems touch every aspect of our financial lives, and if they can get state pensions wrong on this scale, what else are they getting wrong? So here's my final question for you: if you discovered you were owed thousands of pounds in backdated pension payments, what would you do with that money? Would it change your retirement plans? Help you support family members? Finally take that holiday you've been putting off? Or just give you some breathing room and peace of mind you didn't know you needed? Let me know in the comments below. And if this video has made you realize you need to check your own pension entitlement, share your experience in the comments too. Your story might help someone else who's in the same situation. Don't forget to subscribe for more content about money matters that actually affect your life. Not just the big market movements and economic theories, but the practical stuff that impacts your bank account. Until next time, take care of your money, because clearly, you can't always rely on others to do it for you.